Hello dear students, welcome to this semester and I am Padmini Vasant. I am a chartered accountant. I'm practicing from last 20 years. I am an adjunct faculty at ICFI Business School, Bangalore. So today's topic is objectives of accounting. Let's start. As you know, accounting helps organization in achieving their goals by recording, summarizing, presenting accurate financial information to its users. But remember, accounting isn't cheap. You need to have good and educated, well-informed manpower supported with software. But why do we do this? Why do we take this pain to do the accounting? And we have to record, we have to summarize, prepare a financial statement and present to the users. Why do we do this? Because there are some objectives. Let us look at the objectives one by one. Recording. A reliable accounting record forms the backbone of an accounting information system. The fundamental objective of accounting is to maintain a systematic, accurate and permanent record of all transactions of a business such as sales, purchase, income, expense, etc. Thus, we can say that accounting helps me to have a systematic, accurate, permanent and complete record. Second objective, planning. Accounting enables organization to plan the uses of its limited resources such as cash, labor, etc. by preparing budgets. Budgeting process helps organization to plan ahead by anticipating future business needs and identifying potential bottlenecks. Budgets improve the efficiency of organization by diverting resources to the most critical business processes. Our next objective is management decisions. Accounting information helps managers in evaluating a range of decisions to improve the profitability and efficiency of businesses such as pricing decision, limiting factor analysis, financing decision, investment appraisal, etc. Moving on to the next one, performance measurement. Accounting helps to determine how well a business is performing by summarizing the financial information into quantifiable measures such as sales revenue, net profit, expenses and so on. It is important for organization to measure these key performance indicators regularly and reliably so that they could improve themselves by making valid comparisons against their past performance as well as against industry benchmarks. Next one is position analysis. Financial statements indicate the financial condition of a business by choosing, for example, cash flow, capital investment, cumulative earning, liabilities, assets, etc. So we will be able to know our financial position by doing the accounting. Liquidity assessment. Mismanagement of cash is often cited as the primary reason for failure of many startups. But accounting helps businesses in reducing the risk of bankruptcy through timely detection of financial bottlenecks and managing cash flow in a way that the business always has sufficient liquid funds available to pay its financial needs. Financing. Organizations that are low on funds need to present their accounting information to lenders in order to secure finance. Whether a business applies for a bank loan or an investment by shareholders, it will need to provide its historical accounting records as well as financial plans, projections and forecast. Moving on to the eighth one, internal control. One of the key objectives of an accounting system is to place internal control within an organization to protect its valuable resources. Assets of a company such as cash, building, inventory are all susceptible to losses arising from theft, fraud, error, obsolescence, damage and mismanagement. Accounting information system should ensure that such risks are reduced to an acceptable level by placing various checks across the organization. Accountability. Accounting provides a basis for assessing the performance of a business over a period of time, which facilitates accounting across several tiers of an organization. Compliances. Accounting facilitates organization in performing their legal responsibility, providing accurate information of their financial rights and obligations. Accounting is also a legal requirement for most businesses. Law requires organization to maintain an accurate accounting record and to report their financial result to stakeholders such as tax authorities, shareholders and regulators on a timely basis like RBI, SEBI, etc. And the last but not the least, users. The role of accounting is not just limited to the information needs of an employee and owner of a business, but accounting fulfills the information needs of a diverse group of stakeholders such as the bankers, shareholders, etc. So they have their own information needs, hence these are fulfilled by the accounting. So dear students, so these are the discussions which I wanted to have under the objective of accounting. Hope you have understood. Meet you soon in the next video. Thank you very much.